What if everything you have been told about emotions and trading is completely wrong? What if your fear, your excitement, even those gut feelings you get right before you place a trade are not obstacles to overcome, but your most powerful trading weapons? What if I told you there is a woman who has cracked the code on this, and the biggest hedge funds on Wall Street pay her millions to teach their traders this exact system? I'm about to completely change how you think about trading psychology forever. Stay with me because by the end of this video, you will have the three-part framework that elite traders use to turn their emotions into pure profit. And I guarantee you have never heard trading psychology explained like this before. But first, if you are serious about becoming a better trader, hit that subscribe button right now because we are building the most comprehensive trading psychology series on YouTube, and you do not want to miss what is coming next. Here's what every single trading course, every guru, every so-called expert tells you about emotions and trading. Remove all emotions from your trading. Remove all emotions from your trading. Trade like a robot. Do not feel anything. Be completely mechanical. Does this sound familiar? Here's the brutal truth. You cannot turn off your emotions. Your brain will not let you. It is literally impossible. And when you try to suppress your emotions, you actually make your trading worse. You start second-guessing every decision. You override your best instincts. You make revenge trades when you are angry. You chase the market when you are excited. You freeze up when you are scared. The traditional approach to trading psychology is asking you to fight a war that you cannot win. But what if there was a better way? What if instead of fighting your emotions, you could use them as your secret trading advantage? This is where Denise Shoul comes in. Denise Shoul is not your typical trading psychology expert. She has a master's degree in counseling psychology. She worked on Wall Street for years, and she has spent the last 2 decades working with some of the most successful hedge fund managers and professional traders in the world. And what she discovered will blow your mind. Your emotions are not random chaos. They are data. They are information. They are your brain communicating with you in the most powerful way possible. Think about this for a second. Your brain processes millions of data points every single second. Market conditions, price patterns, volume changes, news flows, historical comparisons, risk assessment, opportunity detection. How does your incredibly sophisticated unconscious mind communicate all of this analysis to your conscious awareness? Through feelings. That fear you feel right before you enter a trade, that is not weakness. That is your brain recognizing something in the current market conditions that is similar to a past losing situation. That excitement you feel when you spot a perfect setup, that is not greed. That is your pattern recognition system telling you it has seen this profitable scenario before. That gut feeling that something is not quite right even when everything looks perfect on paper, that is your unconscious mind picking up on subtle signals that your conscious analysis missed. Your emotions are not the enemy. They are intelligence. Denise Shoul built her entire trading psychology system around 3 fundamental pillars. Pillar number 1, emotions as data. Pillar number 2, emotional capital management. And pillar number 3, self-awareness through systemic feedback. Let me break down each one of these for you because this is where it gets really practical. Instead of trying to suppress your feelings, you become an emotional detective. Every time you feel something while trading, you ask yourself one simple question. What information is this emotion trying to give me? Fear might be warning you that the market conditions have shifted in a way that increases risk. Your unconscious mind has detected something that your conscious analysis missed. Excitement could be signaling that you are getting overconfident and might be about to take on too much risk relative to your account size. Frustration after a losing trade might be telling you that you're about to make an impulsive decision to get your money back. That weird, uncomfortable feeling you get sometimes even when a trade looks perfect on paper. Your brain might be picking up on subtle volume patterns or price action that does not quite fit the normal profile for this type of setup. Let me give you a real example. I worked with a trader who kept getting what he called gut feelings about certain stocks. He would look at a chart and just feel drawn to it, even when his technical analysis was neutral. For months, he ignored these feelings because he thought they were just emotional noise. But when he started tracking them, we discovered something incredible. His conscious pattern recognition was picking up on very subtle volume and price relationships that his conscious mind was not processing. When he started paying attention to these gut feelings and incorporating them into his decision-making process, his win rate jumped 23%. 23% improvement just from listening to information his brain was already giving him. This concept is going to change how you think about trading forever. Just like you have financial capital in your trading account, you also have emotional capital. And just like your financial capital, your emotional capital fluctuates. When you are well rested, when you are mentally sharp, when you are feeling confident and balanced, you have abundant emotional capital. This is when you can afford to take bigger risks. This is when you can push your edge. This is when you can trust your analysis and stick to your plan even when the market gets volatile. But when you are stressed, when you are tired, when you have been taking losses, when you are dealing with problems in your personal life, your emotional capital is depleted. And just like you would not risk your entire trading account when your financial capital is low, you should not take big risks when your emotional capital is low. The best traders I have ever worked with track their emotional capital just like they track their profit and loss statements. They know the difference between operating at 100% emotional capacity versus 50%. And they adjust their position sizes, their risk levels, and even whether they trade at all based on their current emotional capital level. They know the difference between operating at 100% emotional capacity versus 50%. And they adjust their position sizes, their risk levels, and even whether they trade at all based on their current emotional capital level. Think about it this way. Would you rather make smaller trades when you are at your best? Or would you rather blow up your account when you are emotionally compromised? This is not about being weak. This is about being strategic. You create a feedback loop between your emotions and your trading results. This is not just keeping a trading journal. This is systemic emotional intelligence development. Before every single trade, you ask yourself 3 questions. Question 1. How am I feeling right now on a scale from 1 to 10? What is my current emotional capital level? Question 2. What specific emotions am I experiencing? Am I feeling confident, anxious, excited, frustrated, bored, or impatient? Question 3. What information might these emotions be trying to give me about this trade or about current market conditions? After every trade, whether it's win or lose, you ask yourself 3 more questions. Question 1. What emotions drove this trading decision? Question 2. How did my emotional state affect my entry timing, my position size, and my exit strategy? And question 3. What can I learn from this for next? Let me tell you about a trader who implemented this system religiously for 3 months. At first, he thought it was a waste of time, but after 12 weeks of data, he discovered something that completely changed his trading. His best trades, his most profitable trades, all happened when he rated his emotional state as calm confidence. Not excited, not fearful, calm confidence. His worst trades happened when he was feeling either extreme fear or extreme excitement. Armed with this knowledge, he started adjusting his position sizes based on his emotional state. When he was feeling calm and confident, he would take his normal position size. When he was feeling extreme emotions in either direction, he would either trade with much smaller or not trade at all. His overall profitability increased by 40%. 40% improvement just from understanding his own emotional patterns. Here's what makes Denise Shoul's approach revolutionary. You are not choosing between emotional trading and analytical. You are combining them into something more powerful than either approach alone. Your technical analysis says buy. Your fundamental research confirms the opportunity, but you feel uneasy about the trade. That uneasiness is valuable information. Maybe your position size should be smaller. Maybe you should wait for a better entry point. Maybe there's something your conscious analysis is missing. Or flip the scenario. Everything looks mediocre on paper. Your technical indicators are neutral, your fundamental analysis is not compelling, but you have strong conviction about this trade. Your gut is telling you this is going to work. Your unconscious pattern recognition might be seeing something that your conscious analysis has not picked up on yet. The key is integration. Use your emotions as additional data points in your overall decision-making process. So starting tomorrow, I want you to implement this 4-step system. Step 1. Before each trade, rate your emotional capital on a scale from 1 to 10. 10 means you are mentally fresh, confident, and operating at peak capacity. 1 means you're stressed, tired, or emotionally compromised. Step 2. Identify what specific emotions you are feeling and ask yourself what information they might contain. Are you feeling fear? What might you be afraid of? Are you feeling excited? What is driving that excitement? Step 3. Adjust. Step 3. Adjust your trading accordingly. If your emotional capital is high and your emotions are giving you confidence in the trade, you can take your normal position size. If your emotional capital is low and your emotions are warning you of increased risk, trade smaller or step aside. Step 4. Journal your emotions and results for at least 2 weeks. Look for patterns. When do you make your best trades? When do you make your worst trades? What emotional states correlate with good decision-making versus poor decision? Do not expect overnight transformation. Building emotional intelligence takes time and practice. But the traders who master this system develop an edge that most people never even know exists. Let me share some advanced applications of this system that might surprise you. I worked with a trader who discovered that his best trading happened between 10 a.m. and 2 p.m., not because of market conditions, but because that was when his natural biorhythms had him at peak emotional capital. He restructured his entire trading schedule around his emotional energy patterns, and his profitability doubled. Another trader realized that she was making her worst trades on Mondays. After tracking her emotions, she discovered she was carrying weekend stress into her trading week. She started doing meditation and exercise on Monday mornings before trading, and her Monday performance immediately improved. A swing trader found that he was most emotionally balanced and made his best decisions when he took a 15-minute walk between analyzing a potential trade and actually placing the order. That 15-minute cooling off period allowed his analytical mind and his emotional intelligence to integrate properly. These might seem like small adjustments, but they represent a fundamental shift in how you approach trading psychology. Instead of fighting against your human nature, you are working with it. Instead of trying to eliminate emotions, you are using them as tools. Let me address the biggest mistakes people make when they first learn about this system. Mistake number 1. Thinking that all emotions are equally valid. Not every feeling you have contains useful information. The key is learning to distinguish between emotions that are giving you market intelligence versus emotions that are just noise from your personal life or physical state. Mistake number 2. Overcomplicating the process. You do not need to become a psychology expert. You just need to become more aware of your own patterns. Mistake number 3. Expecting immediate results. Emotional intelligence develops over time. Give yourself at least 30 days of consistent practice before you evaluate the effectiveness of this approach. And mistake number 4. Using emotions as an excuse for poor trading decisions. This system is about using emotions as additional information, not about letting emotions drive your decisions without any analytical framework. Let me give you some context about why this approach works from a neuroscience perspective. Your brain has 2 primary decision-making systems: the fast, unconscious pattern recognition system that generates emotions and gut feelings, and the slow, conscious analytical system that does logical reasoning. Most trading education focuses entirely on the analytical system, while completely ignoring the pattern recognition system. But here is what neuroscience research has shown us. The pattern recognition system processes information much faster than the analytical system. It can detect subtle patterns and relationships that the conscious mind misses. And it communicates this information through emotions and physical sensations. When you learn to integrate both systems, you are essentially using your full brain capacity instead of just half of it. This is not New Age psychology. This is cutting-edge neuroscience applied to trading performance. Think of emotional intelligence like any other trading skill. The more you practice, the better you get. In your first month, focus on awareness. Just notice what you are feeling before, during, and after trades. Do not worry about changing anything yet. Just build awareness. In your second month, start looking for patterns. When do you make good decisions? When do you make poor decisions? What emotional states correlate with what type of results? In your third month and beyond, start making adjustments based on what you have learned. This is when you can begin fine-tuning your approach and seeing real improvements in your trading performance. Remember, professional athletes spend years developing body awareness and mental toughness. Professional musicians spend years developing their sense of rhythm and timing. Why would trading be any different? Your emotional intelligence is a skill that can be developed, refined, and optimized just like any other aspect of your trading. Denise Shoul did not just change trading psychology. She revealed a fundamental truth that most traders never discover. Your emotions are not obstacles to overcome. They are not weaknesses to eliminate. They are intelligence. They are information. And they are tools that can give you a competitive advantage if you learn how to use them properly. The traders who master this approach do not just make more money. They enjoy trading more. They feel more confident in their decisions, and they experience less stress and anxiety. They develop a sustainable edge that compounds over time. But here's the thing. This only works if you actually implement it. Knowledge without action is what? Worthless. Hit that like button. It helps other traders find this content. Leave a comment and tell me which emotion you struggle with most in your trading. Is it fear, greed, impatience, frustration? I read every single comment and I will respond with specific advice for your situation. Subscribe to this channel because next week we are covering the work of another groundbreaking trading psychology expert. And I promise it is going to challenge everything you think you know about market behavior and human decision making. Share this video with any trader who you think could benefit from understanding their emotions better instead of fighting against them. And most importantly, start implementing the system tomorrow. Not next week, not next month, tomorrow. Your future profitable self I will see you in the next video where we continue building your complete trading psychology toolkit. Until then, remember, the best traders are not the ones without emotions. They are the ones who understand their emotions and use them as competitive advantages. Now go turn your feelings into profits. See you later.